It's not often that we witness history together, but that's what happened today with the 5,000 milestone and 1,000 point increment being hit for the first time. But what does this mean for us as traders and investors? Are there some stats that we need to be looking at around these levels? And what do the sentiment reports tell us about the bulls and the bears at this zone? Today we'll talk about all of that, along with one of the biggest discrepancies we've ever seen between the S&P 500 and Russell, the breakout in oil, and a market that's looking really exciting for the bulls moving forward, as we've seen some huge changes over the last week. Well, welcome back everyone to the Daily Show, where we discuss macro, lead indicators, and the hottest charts together. My name's Tom, and today we're covering stocks, commodities, and cryptos. There's so much to go through, but let's start here with some stats about the 1,000 level, a milestone not often achieved, but does have some interesting stats with it. When we hit 2,000, we saw a pullback. When we hit 3,000, we saw a pullback. And of course, we actually got very close a few times with pullbacks ensuing. Then we had very close hit on 4,000. It pulled back slightly, and as it broke through, it launched. So where we find ourselves right now is a very big zone. Historically, we see pullbacks around this level, but what's important is if we do take the 5,000 zone to realize that pullbacks are generally short-lived. And what I mean by that is the stats are actually very bullish over the next 12 months and 6 months, with the previous 1,000 increments having a 100% track record over the next 6 months if we do end up reaching big zones. So it's very important to know what's going on here, but this is another chart that I think will kind of really dictate a lot of what's happening in 2024. How many rate cuts are we going to get? You can see here a huge discrepancy between the Bank of America and many others. Jefferies going with 225 and UBS going with a 250 basis point cut. I think they may be a bit extreme, but the average really sitting around that 125 basis points. So of course the market and what their expectations are for the rest of the year is very interesting. The results are in, and we posted it over on our X account. Make sure to follow, links in the description down below for the sentiment. And of course, it was huge on the bullish side again, a 49% read this week, with only 22.6% of people being bearish. Now, because we know that bearish percentages over the historical average should be around 31%, we have almost no bears left in the forest. And basically, it's a point now where we're getting near those historical lows where we saw a pullback last time. I think we reached around 20. That was about the lowest percentage. But once we're in underneath 23%, you know that anything could happen very, very quickly on the markets. So let's talk opportunities now. And first up, we've got the Chinese markets, a 3% thrust day, something that's pretty rare, and we don't see this very often. It hasn't happened since 2022's November reopening rumors. This is a fairly big deal, and it leads us into some discussions about the Chinese New Year, which obviously is coming up very, very soon. And what happens here is we tend to see a spike in the last trading day and then actually a decent return over the next 25 trading days. And you'll notice here that the actual stats themselves go into the bullishness. Now, we didn't quite see this, but we certainly did see the thrust this week. So could we be in a seasonal trend in the Chinese markets towards the bullish side? There are some stats that suggest things are changing. Chinese stocks tend to do well after replacing their main regulator, and that's exactly what just happened in the markets. We saw the new, I think it was the guy from 2015 come back, and basically he was pretty instrumental into trying to get these markets up, and of course did rally them in the end. And this is the first move of a few. Of course, we haven't seen what most people want to see, which is further stimulus from the government. But do remember, what they're trying to do here is hold the zone. Now, this is important because we did see a hold of the zone back in the 2010s to 2014-15s, where every single time we got down in that level, we saw intervention in the markets until they started to actually push it back up. This time could be different, but of course it is a positive stat. Every time we've seen a regulator change, it's tended to lead into a bullish move. Now, here's an interesting point for everyone that loves history out there on the markets, because of course we are about to witness another all-time record for 15 weeks up in terms of the stretch. 49.58 is where the market would have to close below for this not to happen. And you can see in recorded history where we've been in the past and how big this thrust really is for markets. If you think it's crazy, I guess you can see why, because we've never actually witnessed it. Now let's talk credit, because these are some macro things going on in behind the scenes. We've seen public credit do okay, bank lending do okay, private credit's actually very, very slow. So it's been growing a lot slower than public and bank lending recently. And we did just see this from Charles V. Payne in terms of a bit of an output here from the perspective of seeing some weakness. Consumer credit plunged to 1.56 recently after having a great November. Black Friday obviously being very, very strong, and then all of a sudden everybody didn't have any money anymore. Now, it is partially a seasonal trend, but we'll be watching this pretty closely because it could be a precursor that people are starting to lose their jobs and tightening up, and obviously the market will eventually react to that. Here's one that I think is interesting from the daily shot, and it shows here Russell 2000 versus the S&P 500. And this is the difference between both of them. And we're seeing one of the biggest discrepancies in history. And you can see here the last time we saw such a big move, a 50% discount from the Russell 2000 to the S&P in terms of overall performance. That's pretty bad. And we already have this on the chart that we've been talking about recently. So it could be time to consider the Russell. The main problem, though, is that, of course, it's the regional banking component, which makes up over 20% of the Russell, that's really the big problem. If you actually look at US 1000 growth, it's been doing fine. Sector by sector comparison, percentage of stocks registering an annual high. You can see here that we don't have any coming in from energy or real estate, that's for sure. Communication services also only 4.55%. So it's not a very good breadth when it comes to the markets across the board. Let's talk CTAs. Of course, we haven't seen any major change going on the CTAs, but we do know that if we start to see them sell, we're going to be paying attention. It's a good sign that the pullback's coming. And of course, we'll be first to report it here. So make sure to subscribe if you're interested in that content. Now, what about put rights, buy rights, all of these types of things? What has been the best strategy over the last couple of months? Well, up until kind of around this point, we were seeing quite a lot of options rights be very, very good. But recently, the S&P 500 has taken over as the best in terms of general strategies. But you can still see here that there's been a huge amount of interest in put rights and calls in general. And this is something that I think will eventually be taken by the market. And of course, it'll provide an opportunity to create some serious movements and some serious spikes in the VIX. We've been talking about some kind of skew kind of breakout here for a little while, and Goldman Sachs has just reported on this. And it's a 1 month call put skew. And you can see here that particularly the Mag 6, which we're now calling it because, of course, Tesla's not coming along to the party, Meta, Apple, Amazon, Google, Nvidia, and Microsoft are seeing some serious skew increases. We're up near the highs now. We haven't seen this huge kind of breakout where things get absolutely ridiculous. But if we do get that on these skews, we'll be the first to report it because, of course, if we get these huge, massive injections of skew, then effectively what's going to go on is we usually see a bit of a crash after that. So we will be looking at it, but do remember it remains in those elevated periods that have historically had big switches. Again, just a little bit of a cautious sign here as we approach that big 5,000 level. Let's now move over to the options side, and 5,000 is a huge key. There's a reason we can't get through it easily. Puts and calls and all sorts of things going on. If we do breach it on the daily, it could create a squeeze that pushes up to the next level, which at this stage is at 5,100. And do remember that there's this little zone in here, which between 49.70 and 49.80, you may have noticed that over the last 24 hours, that the markets are really going to struggle to get through as well on the day trade. So I think for day traders, 40, maybe 980 is going to be a very key point. We're within a 20-point range that's big. And then, of course, we've got 4,900 and 4,870 also being levels to watch moving forward. What do we see? This is kind of like a bit of a flow chart of the markets. You can see the 5,000 level being an increment. If we do break through 5,000, the next kind of level seems to be around 5,000, maybe 20, then 5,040. And then I would say 5,100 would be the next level we would be looking at. There weren't too many big trades going on in volumes, so we'll leave that for another session. But let's have a look at the central bank indicator. It's flatlining, so clearly there's no extra support from this indicator for the markets as we rally up, but something we will look at. US 2-year yields remain something that I think every single person wants to have on their alerts. A 4.5% breakout could be the straw that breaks the camel's back in terms of what goes on here, and we could be moving up pretty quickly, I think, on yields if that does breach. Remember, this is the basing formation that we're also seeing on the US 10-year for 4.2. It's also on the US 20, 30, etc. That's all going to be important for treasuries. If we do see a breakout in yields, expect treasuries to potentially take a new low. Although we remain bullish on treasuries over the next 6 months for sure, in terms of the way that we're looking at it, it is possible to get us back down to the 89 to 90 zone. So I think that's kind of important. Let's move over now to home builders. Home builders broke out, not a bearish sign for markets. So certainly something that you want to keep watching. It could be that this false breaks and then breaks back down, but that will be something that we look at very, very soon together. Let's now move over to the US dollar. So the US dollar is holding its own above. This is really where the bulls need to recommence. And if they get it above 104.50, that will be a huge zone for markets, and we'll certainly be watching that. Gold stands still right in the middle, guys. We'll report on that soon. And a massive breakout in oil. We talked about 74 being the last point that the bears were going to potentially have a short at it. We obviously were bullish into this phase. And then I mentioned this in our Market Masters Club, links in the description down below, that oil was looking good to 76.50, and it almost did it overnight. I didn't expect that when I woke up this morning here in Australia, but back to the heavily traded zone, a big breakout. Also could be a precursor for yield, something to watch. Tesla, middle of nowhere, break above 196 is going to be bullish for Tesla. This is a good crediting zone, as we talked about, and there is still a possible return back to 165, especially if we sell. Semiconductors broke out, no double top, no weakness off that island reversal. These are the strongest markets in the world, so semis, nothing to it. It does just show you again, though, if you were going to go short and you gave it time, it has to be an option, because if you don't use an option, you're going to get really hit. Now, there are a lot of opportunities in buy stocks. This is just an example of one that I've looked at within our club, and it's been Hershey's. And Hershey's had a pretty good basing formation. It'd been absolutely slaughtered. And of course, whatever the earnings was, I guess it was green, it went up. Pretty welcome surprise when I woke up again today, just showing you that, again, there are lots of opportunities. If we take a look at Disney here, you can see it was even better. I actually had an original target at 101 on 102 on Disney, but when it was opening up at 105 yesterday, it seemed likely it was going to keep rallying, and it certainly did. 110 by the end. Good TP zone for number one, but maybe the mouse is getting out of all of its troubles, at least according to the markets. Hang Seng Index, any breakouts? No, not at this stage. So we'll be looking at this level to be broken. For that, I still feel like there could be base formations here. 16,500 is a key zone. And then we move over to, of course, the major indices out here. Australian market, good weekly close if it happens. We'll report back on the weekend to see what's happening there. The Russell 2000 holds the bull zone for now, gets back into the bear area. This 197 is where bears may show up. So watch on the small time frames, but overall actually a bullish pattern here for the Russell coming off that base. The Qs grind higher, not much to report there. And then of course there's the S&P 500, the 5K zone, no daily close realistically above that. A watch reaction at this area. I could see spikes and then rejections. If we get a close, that will be a big deal for the bulls. So of course they'll be looking for that. And 49.85 might be worthwhile having as an alert on the smaller time frames. That could be where the bulls and bears fight it out to see who can win. And if the bears do win, they could push it easily down to 49.55 relatively quickly. What about Bitcoin? Well, we talked about the short time frames having a short here, but that is no more. As soon as that got wiped, it seems likely now that Bitcoin may move to 46.5 to 47,000. And it's well on its way there, already up almost 2,000 from that point. If you enjoyed today's video, please remember to subscribe, smash that like button, guys, and we'll see you in the next one. Bye for now, and have a great Friday.